In your opinion, why do you believe the physical silver prices isn't reflecting the the actual spot price?
Well, I think, as I said, when you look at the silver demand, there are some metrics that are. So, for example, we've seen lease rates move up quite sharply over the past few months. You've seen premiums on, say, 4/9 purity silver at astronomically high levels, 20 or 30 cents in the US. And that hasn't been a spike. We've seen that for much of this year. So there are definitely some metrics in that regard that are reflecting the strength of demand. Or you're looking, again, staying with the US. Look at the wholesale or a retail premium on one of the bullion coins. The eagle may be a slightly extreme example, but look at the maple leaf. So you are certainly seeing metrics which certainly reflect the strength of demand.
Mm-hmm. And the COMEX and LBMA are being drained at record levels of physical gold and silver. Do you believe this trend will ultimately continue? And what happens when we get to critical levels?
Well, I think ultimately, when we look ahead and try to crystal ball gaze for next year, we think the silver market will still be in a deficit. However, we don't think the deficit will be anywhere like what we've seen this year. So in that sense, that alone will mean that the pace that we would expect to see the drawdown on COMEX or on London, that should significantly ease as well.
Why is that?
Well, because you won't have to have that drawdown. So one of the reasons you've had, for example, a very large drawdown of London stocks this year is that a lot of that metal is being put on aircraft and air freighted into India. So India has imported, record quantities of silver this year. Yes, you've got a big jump up in silver demand because prices at the back end of this year have been lower in rupee terms. But you've also had sort of a restocking of the pipeline in India, quite extreme levels. And although, we think that will carry on into next year, that will also at some point will normalize. Right. And so that will take a lot of the pressure off of the market. So as bullion imports into India normalize next year, that will mean that you won't have that pressure to draw so much metal out of London.
At what prices do you think, like let's say silver starts making a run hypothetically, and what prices do you think silver will start flooding the market? Like lots of people in India just carry silver jewelry. Do you think it's $28, $30, $35 that you'll see a flood of silver hit the market just for people to pay their bills?
Well, I think that's a really good question. I think, in previous years when we've seen a lot of liquidations of physical silver, it's been much more, I would say, sort of the flatware than the jewelry market for obvious reasons, given the very high margins of which silver jewelry is sold in the US as a good example. You go back to the global financial crisis, it was, yes, there were queues of people selling flatware, but it was much more about people selling their gold jewelry and silver. But to your point, very recently, when prices picked up the past couple of years, we did see very heavy liquidations in India. But again, much of that metal was turned around and consumed within the country. We didn't have a great deal actually coming out and going into the international market.
Oh, okay. So what are you looking for, Philip, right now specifically in order for precious metals to take off? Is it the Fed pivot or something else?
I think to your point, I think you've nailed it on the head, really. I think you would need, I guess firstly, it's expectations of the Fed pivot coming, and then actually that realization, of course, the language around that, what that means for future rates. And ultimately what it boils down to is where real yields are heading, because what's been keeping pressure generally on gold and silver, not just the absolute level of yields, but of course it's expectations of where they may be the back end of this year or into 2023 as well. So I think the yields is absolutely fundamental. And then drilling down into silver again, what does that mean in terms of expectations for the economy, for the recession? Would we therefore see base metals start to recover? And that in turn could benefit silver as well.
Do you think the second, let's say 2023, the Fed starts slowing down on their rate hikes, and they actually pivot or just completely halt rate hikes. Do you think silver and gold will completely take off the second day, or will it take time to settle in?
I think it could take time. I guess in our view, you're still going to have a really important headwind of real yields next year. So, for example, just to run a scenario, if the Fed say pivots, around mid-year, it takes time for that to feed through into yields falling, because you could still have a situation that, where's inflation going to be? I mean, from our point of view, even though you've still got a relatively tight labor market in the US, it's more about sort of anniversarying where energy costs are. In other words, you don't need energy costs next year to fall compared to this year. But of course, year on year, that would, by definition, bring inflation down. So you could have certainly a lag where, yes, the Fed starts to pivot, but you've got inflation coming down, and therefore that would also support real yields. And in our view, as a research house, that will present a considerable headwind for gold and silver prices in dollar terms.
Now, with all the chaos in the market, where is Philip putting his money? Gold or silver, or both?
That's a really good question. I wish I had enough to put that. I mean, from we think about the cost of living crisis. I'm more concerned with my mortgage payments. I think, though, from a market point of view, as I said, I think both could struggle next year. I think the really interesting thing, though, and we've certainly seen it this year, is how much equities have struggled. So even though both gold and silver are either down slightly on an intra-year basis for 22, they have still outperformed equities. And I think that's certainly something that institutional investors are looking at. And even with the prices that we see now, even if they were not having much of a net long position in the marketplace, just to have gold prices where they are, or silver, that still tells you there is considerable institutional interest in the marketplace.
Now, let's move on to something a little bit different, Philip. Russia, they said that the West has essentially stolen its foreign currency and gold reserves. Will some countries look at that and say, I'm not storing any of my gold with the West ever again? What's your opinion?
I think that has been a motivation for some central banks for some time, because you do from time to time see gold being repatriated. This wouldn't be the first time that's happened. So I think that's something we've seen, that trend growing, whether it's an outright purchase and we're going to store that in our own vaults, or as I said, if that's stored outside the country and it is being moved back home.